Good day, class. Welcome to financial accounting class. Today we will continue from where we stopped during the last class. Last class we started talking about subsidiary books, and we were able to discuss like 4 of the subsidiary books. We talk about sales day book, purchase day book. We talk about return inward, and we talk about return outward journal. The next one we'll be looking at today is what we refer to as a cash book. When we are talking about cash book is one of the subsidiary books that we use in making entries for cash received or cash paid. Basically, when we talk about the cash book is a subsidiary book that we can use for transaction that involves immediate payments, either by cash or by check. To remind ourselves, I made mention of it during the last class that cash book is categorized into 3. Number 1, I said we have what we refer to as 1, single column cash book. 2, we have a double column cash book. And 3, we have 3 column cash book. For the sake of this class, we'll only be looking at double column cash book and single column cash book, as everything we'll be discussing in the double column cash book cover whatever we will have discussed under single column cash book. When we are talking about double column cash book, it is also known as 2 column cash book. It's also known as 2 column cash book. This is a type of cash book that is used by business that operates both with cash and with bank. Talking about, double column cash book. Double column cash book is a kind of cash book where we have 2 columns for both debit and the credit side, which means 2 of these columns we use to record transaction made by cash or by check. So from debit side, when we have cash received, we put it under what we refer to as a cash column. When the cash is received, the money received is by check, we also record it, under what we refer to as bank column. But if it is payment, just like we said earlier, it's going to be credited. And to remind ourselves, we talk about what we refer to as a format, that is the format to record what we refer to as a double column cash book. I told you during the last class, I said that cash book is a kind of subsidiary book that operates or that function as both book of original entry, that is subsidiary books, and also function as an account. And if you remember, I said that for double column cash book, it contains column for date, for particular, another column for folio numbers, then we have a column for cash and another column for bank. This is what actually makes it double column. And mind you, we said there's going to be debit side and we're going to have a credit side. Also, for the credit side, we are going to have a column for date, column for particular, column for folio, for cash, and bank. So this is format for double column cash book. Now, if it's very important that we have heading, so this is called double column cash book. So, having looked at this, for us to understand this better, let's have an hypothetical example. What we're saying is that we're going to have various transactions that are basically involve immediate received and payments of cash. So, and with that, we'll be able to understand how cash book is actually prepared. But before we actually go to that hypothetical example, there is one particular thing that is peculiar to cash book, that is to double column cash book. And what is this thing we are talking about? We call it contra entry. When we talk about contra entry in a cash book, contra entry is a situation where double entry of a particular transaction appears at both debit and credit side of the cash book. And this contra entry is mostly peculiar, with the cash transferred or cash received, within the same purse. What I'm saying is that when we have a cash in hand, we can decide to, transfer that money or to take it into our bank account, as a business. Then definitely, since the money still remain, with the business, then the double entry of that transaction can be completed on that same cash book. So, and when that kind of thing occur, then we call it contra entry. So, contra entry simply is a situation where double entry principle or where double entry of a particular transaction is completed in a cash book. So, let me give you a kind of instance for this. If we have, for example, cash paid into bank. So, for example, I have excess money. I have money in my cash till. So, and that money is not really needed at that moment in time. So, such money can be taken into the bank. So, which means the money is no more in cash, but is in what? It is in bank. Now, for this type of transaction, it will be treated as contra entry in what? In the double column cash book. And how do we do it? Now, since the cash is moving from cash till to the bank, then what we are going to do is we are going to debit bank accounts. So we debit bank accounts, that is the bank column in the cash book. So then we are going to credit cash accounts, since the cash is actually going out to the bank. So bank is receiving, we debit the bank. Cash is given, then we credit a cash account. Another scenario regarding this is when we have something like withdraw cash from bank for business use. In this situation, if we have money in bank but we need it in cash, so once we take the money from bank and put it in our cash till or make it available in form of cash, then the double entry for that transaction can be completed on the double column cash book. And in that case, the money is taken from bank into the cash till. In that sense, the double entry will be in this form. We debit cash account, that is the cash column at the debit side, then we credit bank account, that is the bank column at the credit side. So the reason being that the cash is being withdrawn from the cash from the bank into the cash till, so meaning that the cash is receiving, then the bank is what is the giver of the money. So that's why the bank is going to be credited. So that is one peculiar thing that is common, when preparing what we refer to as a double column cash book, and it's very necessary that we actually take note of it. So that is why it is very important for us. Now, let's move to the next okay, Let's quickly look at this analytical example for us to understand how to post these transactions in what refers to as a double column cash book. Just like I told you before, that it's a kind of subsidiary books where cash or where transaction that involves immediate payment recorded. If you look at these transactions, you will realize that all the transactions we have here involve payment either by cash or by check. Now, if you look at these transactions, we assume that we have a company called Java Limited had the following transaction for the month of April 1999. If you look at the first transaction there, is already existing transaction. That is, in April 1, we have a cash balance which is 50,000. What we mean by this is that probably after March, the end of the March, the firm or the business is having an amount of money in cash which is 50,000 naira, while the bank balance stood at 70,500. So as at April 4, the business received cash from Ayo. So probably Ayo is our debtor, which is of 20,000 naira. Then by April 6, the business paid rent by check, 13,000 naira. Now by April 10, we have a cash sales that's worth 12,000 naira, and as at April 12, we have cash paid into the bank, which is 3,200 naira. So then the next transaction said bought goods paid by check. So we purchased some goods and we paid by check, which is 7,000 naira. Then by 18th of April, Java Limited paid Mr. Amuid in cash of 11,000 naira. Then on 20, we have electricity bill paid by cash, 7,000 naira. Then on 25, we have another cash sales, which stood at 14,000 naira. Then we have on 27, cash purchase, 20,000 naira. Then we have on 29, paid wages also in cash, which is 4,000 naira. So to do that, now let's look at these rulings. We said that for double column cash book, there's going to be two columns, one for cash and the other one for bank. So when transaction is in cash, it's going to go to the cash column, but when it is made by check, it's going to be recorded under bank column. Now, as at April 1, the first thing we have in there is cash balance and the bank balance. So since it is what is being credited into business accounts, or what is actually at hand, then it's going to be debited, in the cash book. And before we go into the proper entry, for you to record any book, there must be proper heading. So the cash book is meant for Java Limited, so which is supposed to appear on top. Then we have to actually signify which of the which of the cash books are we actually preparing. So, and that is double column cash book. So you also have to indicate, the debit side and the credit side. So we said that the debit side is meant for whatever we received, either in cash or by check, while the credit is meant for the payment, either in cash or by check. So as at April 1, we have cash balance. So this cash balance will be written as balance brought forward. That is, what we have at the end of the March, that has been brought forward to the month of April. So we're told that it was 50,000 naira. On the same date, we have the sum of 70,500 naira, 70,500 naira in bank. So as at April 4, receive cash from Ayo. So I told you that when cash is received, is to be debited. So in that case, we have April 4 here. And from whom did we receive? That is from Ayo. So from Ayo, we receive sum of 20,000 naira. Mind you, they said cash from Ayo, not check. So since this is cash, then it's going to be under cash column. And that is 20,000 naira. Then the next one says that paid rent by check. So since the money is going out now, so it means